they make it not attractive to go out there right now and spend your dollars or spend your money in a form of investing into risky assets. What I want to talk about today is the FOMC, Federal Open Market Committee. I want to simplify it for everybody out there that see that every time there is a Federal Open Market Committee meeting, prices of crypto and Bitcoin going ballistic. I know there is a lot of people out there that don't understand what it even means or what is the FOMC. Before I go ahead, I just want to remind everyone, this is not a financial advice. I'm not a financial advisor. Everything that you hear here is just my opinion and my view on things. You should do your own research and you should never ever take any type of trading action that can put your capital at risk based on someone on YouTube. So simplifying the Federal Open Market Committee. Pretty much, Federal Open Market Committee is the committee that is responsible to determine what will happen with the American economy, and by that, what will happen with the dollar, and by that, what will happen with the rest of the economy. As we know, the US dollar is the safe haven. The US dollar is the stable coin in a way of the fiat world. When there is uncertainty or there is any type of volatility in regarding to different world economies or different world situation, like the war that is going on right now in one part of the world, everybody is fleeing into the stable coin, which is the US dollar. And as we can see right now, because of the high inflation in the United States, the Open Committee decide that they are raising interest rates. They do the rate hikes, by that making the US dollar to be more relevant for those investors who are thinking about their risk aspect of investing. So pretty much what they do is they made the US dollar to be a good investment. Because if you can get 2.5% or 3% a year return on just keeping your money in dollars, which is low risk, the most low risk investment that can be out there, just like basically if you put your money in USDT right now and you're getting a 3% ROI a year. So you have no risk, 0 to none, and you're still getting a pretty decent ROI. When normally, just to understand, before all of this situation happened, the ROI on the US dollar were negative or 0.25%. So, because the dollar is so relevant right now as an investment and there is so much benefit in holding it on paper, and I will explain why on paper, a lot of people are fleeing from any other investment and going to the dollar. That's the reason you're seeing the crypto crashing, you see Bitcoin crashing, you see stock market crashing, because it's just too risky for them, and they have an alternative right now, which called the dollar, that the Federal Open Market Committee made so attractive because of the high returns that you are getting right now, that everybody just basically saying, thank you very much, I don't want to take any risk, I'm just going to hold my money in dollars right now and wait on the sideline. I'm still getting 3%. And Federal Open Market Committee said that they are planning on continuing until they're going to reach to 4% or even 4.5%, which is a very, very decent yearly return on just holding your money in dollars. Now, I'm saying on paper. Why I'm saying on paper? Because on one side, we need to understand, they are making the dollar to be attractive for investors because you're getting a good high return on it. With that, you also have inflation that is very, very high, which this is the reason why they are doing it. Now, if my inflation on a year is 8% and my return is 4%, it means that by holding the dollar, even though there is a 4% interest on it, I'm still losing 4% a year. That's why, doesn't matter what, it's never make any sense to hold your money in dollars, because you are getting value with the interest, but you are losing more value by inflation. Now, the reason that they are doing it is because they want people to spend less money. If you're getting a good returns on your dollar, it gives you the incentive to keep your dollar. And that's what they want, because the only way to fight high inflations is by having people spend less. If people will spend less, prices will not continue to go higher, and by that inflation levels will go lower. But there is another risk. If they are doing it too fast and too aggressively, then we can get to the point that there is a recession. and after recession, even a depression. Basically, what recession and depression means? It means that when there is a recession, it means that the most amount of people are not willing to spend, and also unemployment rate is going up. So people are not afford themselves to be able to go out and spend money, and this creates a market recession. It means that the market is on a halt because there is no spenders out there. Now, getting to the point that you don't have spenders out there can come from two situations, which this is the main manipulation that is always happened, the two powers. One way is by making the dollar so attractive that you don't want to spend it. The other way is by making sure that people don't have any money to spend. Now, if inflation is so high, I can't spend because it costs too much. I cannot afford it. If interest rates are high, it's not worth for me to spend because I'm getting a high return just by saving my money and holding it. And this is the way that they are fighting inflation. And by that, what they're doing, it's neutering the market. And that's why we're seeing what we're seeing right now on the markets. Pretty much, to simplify it, they make it not attractive to go out there right now and spend your dollars or spend your money in a form of investing into risky assets. Why? Because the return is good enough just by holding their currency. But it's all an illusion because inflation rates are still higher than interest rates. That's it for me. I hope it was helpful. I hope you understood everything and I simplified for you the subject, and I'll see you in the next one.